The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, looks like it's going to be Philadelphia and New England. I will give you 2 cents worth. Nick Foles, the quarterback for Philadelphia, played here at the University of Arizona in Tucson, and I will tell you this, he's a good football player, but far beyond that, he is a really good human being. I mean, he does so much work for charity. We were involved in one of these walkathons for cancer, and he was there, and he gives a lot to it. He's just a really super nice kid at the age of 29. In fact, his birthday was January 20th. I went online. My grandsons like to see the Eagles. They're big. They don't. The 4-year-old, he doesn't know much about football, but I was going to get him jerseys for the Super Bowl, and I went onto the Eagles website, and everything was sold out. So you can see how the money from the Super Bowl starts rolling in. Okay, let's talk about the Super Bowl of markets, and we're going to be starting today with the DAX like we usually do. It's been in a nice little uptrend here for the last few days, much like the rest of the world, and it continues to looks like it wants to work a little bit higher this morning. If we look at the FTSE, we've made this huge double top here. It was an ABCD pattern at the 1.618 expansions up there at 17,700. We're not too far away from that right now, so it hasn't backed off very much. Whether that ABCD is going to turn this market down or not, certainly will be very interesting, to look at it. So anyway, remember the January effect is usually what it means is the January effect means that smaller stocks gain on the larger stocks in the first few days of January. I don't know exactly why that is, but statistically that's what it's supposed to do. I don't know how to take advantage of it other than looking at the IWM, versus the S&P, but the IWM was not able to make a new high, and that was the only index that was not able to do that. And we'll put this up here to let you take a look at it. Now, if we do make a new high today, all bets are off, and we could certainly, move a lot higher as we come in today. But we've got a couple of things to watch as far as potential turning points today in both notes and Treasury bonds. They're very, very interesting here. Oh, by the way, folks, I want to mention tomorrow I'm going to have John Jameson of the Jameson Letter on. He's been talking to me about something called Lightning Network. It's something really brand new. It's added on to blockchain programming, and he said this could be, the next Bitcoin type thing, but it's brand new. He wants to talk to me about it, and so we'll share that with you guys tomorrow, and he'll give us a little bit of an update. But he studies this stuff all the time, much like he did with the internet, back in 1990. So we'll watch it. All righty, let's look at a couple of things here that we've got to have questions on. One here is a stock called General Electric. Let's just put this up here, and you'll take a look at it. You'll notice General Electric has been in a very, very strong downtrend. It got as high as 62 in the dot-com bubble and went all the way down to just about $5.50 a share. It then made a 50% rally off of that high, and now we're sitting right at the 61% retracement of the low from 2009. Folks, if it doesn't hold 16, this stock might not make it. I know it's got a lot of components and it's got a lot of assets and stuff like that, but it's the last remaining stock in the Dow Jones Industrial Average. That goes back to 1896, so you're talking about a long time. And so this is very important to watch this General Electric hold $16 a share. That's only 26 cents away from where it is right now. But, you know, it's dropped in half since 2016. It went from 32 to 16. That's not bullish action, especially when the rest of the market, you know, was, you know, going straight up. So we've got to pay attention to those kind of things, because if this stock doesn't make it, you know, there's going to be some really, you know, really interesting things going on with who's going to replace GE in the Dow. My guess it would be somebody like Amazon, because Amazon goes up every day, well, almost every day. Anyway, let's move on to another one that looks real interesting here. Oh, I wanted to share a chart from our good friend Rich Anderson that sent this to me during the, he's of course a Viking fan, and he was not very happy about the game yesterday, so he sent me this cute little cartoon that I want to show you about stocks, about buying downside protection, because one of the things we want to chat about here is the volatility index, because the volatility index, folks, I just cannot believe where we're trading, because we've went over 1,000 points straight up in the Dow, and yet the volatility index did not collapse. We made new highs in the S&P, new highs in the NASDAQ, we made new highs in everything, and yet the volatility index is still holding up. That tells me that some people are taking some type of protection, and are taking it in a big way, because they're willing to buy something that should be, you know, dropping in value, because you know, as stocks go up, usually the volatility index goes down. So this is going to be really interesting to watch here over the next few days and weeks, for sure. One of my focal points today in the newsletter was the fact that we've had so many gaps in the, let's just bring the one up I wanted to show you. This is the New York Stock Exchange Index, because this is something we've never seen before in the history of stock investing with the NYSE, and that is we actually had a monthly gap, you know, back in November. And so that is really an unusual thing. Usually gaps will be filled, but the question is when. But to see a monthly gap on that, folks, that's so hard to do, because you're looking at about 2,200 stocks on the NYSE index. That means almost all of those stocks have to gap up, and they're cap weighted. In other words, the capitalization is what's really important. So that's just a hard thing to do, and in fact, yet it did it. So you have to sort of respect that. But when those gaps start to be filled, that's when it's going to be interesting, because we've got 11 of them in the Dow Jones Industrial Average. And when they do start to be filled, they will probably be filled very, very quickly. But we're going to see, hold on a second, Steve is asking a question. About the 135 pattern when it doesn't work. When a 135 pattern doesn't work, Steve, and that's where you have the 3 lower tops or 3 higher bottoms, that's very important, because if it doesn't hold at 0.5 that we've seen many times before, that just means it's going to go up and either make a 1.27 or a butterfly or something higher, but you can't stand in front of it. That's the beauty of the 135 pattern, is the fact that you're at the moment of truth, and you certainly cannot take any more risk than what you see on that chart. In other words, if you have a 618 and 78% level at 0.5, you don't have to risk hardly anything. You're talking 1% or less in a stock or in a commodity, $300 to $400. That's the really beautiful of it. If you got an example of a 135 pattern, why don't you post it, Steve, and we can talk about it. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and Steve Rhodes has informed me that, and he has a great show here at TFNN, that we did have a gap on the NYSE index back in 2013 that is still unfilled. So there's going to be two of them there. I didn't go back that far because I was just shocked to see it on a monthly basis. Anyway, let's take a look here at I've put up a chart here of the Australian dollar on a daily chart that I used when I did the PowerPoint for presentation for TFNN for the 135 pattern. But I wanted to show you basically the differences between the two. You'll notice on the left you see a 3 drives to a top pattern. That's quite easy to see. But then on the right you see the 135 pattern. Those are lower tops. You'll notice that each of the tops is lower, and the cycles need to be very, very consistent. In other words, from point 1 to point 3 and point 3 to point 5 should be, pretty much spot on. This is the beauty of this pattern, is because if you get much above that point 5, that tells you you're going to go much higher. That's a very good way to control risk. This pattern was shown to me by Roy Longstreet and his son Bill 30-some years ago. All I did was show them how to put the ratios in, and they were very excited about that. But the pattern does work very well. You don't see it too often. You see the 3 drive to a top pattern or 3 drive to a bottom pattern more often than you see the 135. But when you do see it, you know exactly where you are. And what's good about it is the fact that it has the cyclical component in it. In other words, the cycles between 1, 3, and 5 need to be very, very symmetrical and pretty much spot on to the ratios that we look at. So that's the real beauty of it. But you got to remember, when those things fail, that's telling you that there's trouble in River City, and you certainly don't want to. Stand in front of that. That's the main thing, to really be looking at. So, okay, let's move on, and we want to talk about, I want to talk a little bit here about Twitter, because we've had a really interesting pattern here complete in Twitter. Just a second here, we'll get it up here. And we'll take a look at it. I have to tell you guys a funny story, too. With the football, here in Arizona, football is a big thing. And especially since Nick Foles was at Arizona, everybody, really liked the young man because he was a really good player. He was drafted third round in the draft, but now his value went up a lot after these last several games. But they had a special promotion yesterday during the Texas Hold'em tournament. We buy in for $40, and it was so busy they had to add a couple of tables because they were giving extra money away. And I have a limit of $200. If I lose $200, that's it. And after the first game, I only had $30 left out of my original 200, so I figured I'd be heading to the door pretty quick. Folks, for the next 2 hours, I didn't lose a hand. I just couldn't lose. I mean, I had 2 straight flushes, and it was unbelievable. And I won a few $100s, but to go from, minus 170 to plus 250 in a small limit game like that in a small tournament was really quite good. So we were having a lot of fun, and we did it, so it was really good. Anyway, yeah, he turned into Johnny Unitas last night for sure, but he was always a good player. He really has. In fact, he's had some statistical games that were just unbelievable, like 7 touchdowns in one game or something like that. So he's not just a good football player. He's a nice human being. He's very humble and just as nice as possibly you can imagine. He goes to the hospitals where the kids, when he was here, where the kids are sick, and he would spend time with them and stuff. And on Sundays, he would go out and meet the public and stuff. He's just a nice young man. Anyway, I'm glad to see that he's doing okay and hopefully does well in the Super Bowl. And but I will tell you one thing, boy, they got their job cut out for him. That Brady guy is he's in a class all by himself. Let's switch over here to Bitcoin because I want to talk just a little bit about it today. We're going to have John Jameson on tomorrow to talk a little bit about Bitcoin with this new thing called Lightning Network, which is going to be supposedly another layer added on to Bitcoin, to blockchain modeling, so that it will make it a little bit easier to access. And not only that, it will prevent the banks. In other words, this recently, we've had China, India today, and then also South Korea, China, and now India, as of today, have not allowed any more Bitcoin type trading. So what they're trying to do now, these people that are in the know, is to get around what these banks are trying to control, because the banks seem to be afraid of what's going on. But, well, whether that's true or not, I don't know. But anyway, this thing called Lightning Network might be the thing to do it, because it allows people to have open source trading in it, which is supposedly, a pretty good thing to do. All right, we'll take a look at Bitcoin. We made that big ABCD down there at 9,200. We rallied a little over 4,000 points. We backed off just a little bit today. In fact, folks, I am really shocked that Bitcoin is only down about 500 points so far today per share. Heck, you can believe that. But with the news, the fact that India, which is a huge market, you're talking about 1.3 billion people that are not going to be allowed to do anything in Bitcoin, and yet you can see the stock has held up incredibly well. So that's going to be interesting to see what's happening, because if they can hold these levels here, we've still got a chance, for that upper number at the 78% level, which comes in around $15,400. So keep an eye on that, because it's very, very interesting to see if it's going to be able to hold up to that level. The other thing is we've got a potential turn in some of these grain markets, wheat, corn, and beans, coming in here to the third week in January. And also remember, we have this huge lunar eclipse coming in here on the last day of the month, the 31st. So we'll watch that one. When it comes up. That'll be later on. One other thing I wanted to warn you folks about, there's a lot of scams going on at some of the major banks, Wells Fargo being one, where they send out these notices that you don't have insurance, on your house. And, we've been here for a long time, so I've had the same thing forever. And so I got this notice on Friday, and I called the bank, and they didn't know anything about it. So it was a scam, or they wanted to get information from me. It was on perfect letterhead and everything. Everything looked like it was correct, except that it was all bogus. So be really careful out there, folks. There's a lot of bad people on the internet, and they are very, very clever, some of them, as the government already knows. But you just don't want to get involved in some of these things as we look at it. I want to talk just a second here about the Twitter market. You'll notice here, I think we'll get this chart up so we can see it. We had a beautiful pattern in Twitter up there at 26 bucks. We're now trading about 10% below it. You'll notice that the move between July and September, you see those big gray swings, those were equal moves. That's a big ABCD. And remember, this is a downward trending stock. You know, it topped way back several years ago. It's just been in a holding pattern here since July between 13 and 26. And that tells us that we're probably getting ready to pull back into the $20 a share, another 10 or 15% lower than where we are right now. So we'll watch this one with a great deal of anticipation. I don't trade it, but some of the folks here do. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking a little bit about Twitter. We would be looking for a minimum move down to about $20 a share in the Twitter. The important thing is you can see the patterns. They're so easy to see once you practice with them, and what you're trying to do is to find a spot where you have multiple ratios coming together, much like we had up there at that $26 a share. And you can see multiple ABCD patterns and beautiful expansions and everything, and that's what we're really trying to look at. We saw that same thing in IBM, if you remember, when it was up around $70 or 69 and change, and it's now at 63. or so. So, they don't always work, but when they do, that's what's important. It's not about the ones that win, folks. It's about the ones that lose. You must focus on your losses. And the reason why is that's how you control your PE, your profit expectation, is you must control your losses, because you don't know how much profit you're going to make. You never know that. The only thing you can control in the risk-reward equation is the risk. So that's what you should focus on, and that's what pattern recognition really tries to do. And you're only trying to be right about 6 times out of 10. So if you can do that, you should be able to turn the corner and have a pretty good move. Now, there's going to be times where we have really big moves, like we had in the gold market, and believe me, that market is holding up incredibly well, folks. I mean, it is just absolutely amazing how well the gold market is holding up. Anyway, hold on one second here. I've got to take care. Let's see. I was making a joke with somebody, and I made a bad mistake. Language barrier. Okay. Anyway, let's just move on to the next one here, and we will. I can't tell you the whole story about this because it's rather funny. Anyway, let's take a look at this gold, because it has really held up incredibly well here on this last run up. I mean, to go up $108 and not even back off. Folks, we backed off 5 days, and the most we backed off is just about $20, and the harmonic number on gold is 17, so maybe that's enough. I do believe if we close above, that 1350 level, that's going to be telling you that, it was really an easy way to do that. It's really something. But anyway, the main thing I want to talk about here is this silver market has been lagging behind a little bit, which is another reason to think that we're going to get some type of a, correction, in the gold. But here again, if we look at the silver, you're looking at the same thing. Here for the last 4 or 5 days, we have a very, very minor correction. So these markets are acting pretty good. Folks, if Bitcoin can go to 20,000, gold could make a new high at 19,000. Come on, give me a break. Gold is something you hold in your hand, and it's tangible. He who owns the gold owns the rules, or makes the rules. But this is something that looks really interesting in this gold chart longer term. It really does. So watch for a $34 correction. That would take us down to about $13.12, $13.10 in the gold. And that would be a very interesting thing. But we've had very little of a retracement here, given the fact that we ran $108 and cannot back off very much. That's a very, very positive sign. That might change, but right now that looks very, very positive. When we got that buy signal down there at 1340, nobody wanted, or 1240, nobody wanted to buy it. And if you remember, one of the things that gave us the confidence in that is, if you remember that Twitter chart that we just looked at just a minute ago, here's an upside down version of the Twitter chart. You'll see here the big ABCD pattern in platinum down at 875, and now we're trading above 1,000 and has not backed off at all. Hey, we got one of our favorite people calling in from Go Eagles, Go Eagles. John from Philadelphia, how are you, my friend?
I appreciate that backgrounder on the Eagles quarterback. That story I hadn't heard, so thanks for sharing.
Yeah, he's a super nice guy, no question about it.
Say, Larry, I wanted to ask if you could go over patterns with me, please, on wheat, corn, and beans.
Okay.
For full disclosure, I'm long all 3 of them.
As you should be.
The July new crop Kansas City wheat futures, and then the active and lead contracts on corn and beans. And as you know, I've been probing for lows since December, and they're starting to move up. And my question is, pattern-wise, do you see prospect for further rally? And can you give me some guidance on either one or all 3 of them, please?
Okay, John, let's start out with the soybeans. As you can see, we had a nice little rally on Friday, and I'm looking for a little bit of a pullback where we're sharply higher this morning, I understand. So this one looks like it's really turned the corner. That's another one that looks really interesting to me. But if we switch over to the wheat and just take a quick look at the Board of Trade wheat, And you'll see here that we've had a pretty significant bottom here on December the 11th. That was, Dorwinski's, huge cycle day. We had a big 3-drive pattern there with two 1.618 expansions coming in, absolutely perfectly. Then we had a pullback that went just slightly below the 78% level. Then we've rallied here for the last 4 or 5 days, and backed off for a day or so. So I really believe that this wheat is really got legs. I mean, it's starting to look like a head and shoulders pattern. So that's another one that looks incredibly well. And the final one, of course, we'll take a quick look here at the corn, and we'll look at March corn, and we're going to be switching over to July here pretty soon. But if we look here at the corn, it looks very similar to the wheat. But the corn has had 3 major tests of that 340 level, which is the theoretical cost of production, as you know. And so these all look good, John. I like them all. Are they sharply higher this morning? I understand they are.
Yes, I'll quote you. The July Kansas City wheat is 461 up 3. March corn actually is up, is 354 up 2. And the March soybeans are last 986 up 9. So corn and wheat just up a touch, beans up more, and the soy meal is actually up close to 2%. So that seems to be where all the buying is focused. So that's where we stand right now. Larry, I wanted to just contribute just a couple of observations for you on all 3 of these. I'll just share with you, I haven't done anything with corn for literally 12 months, maybe it's longer, and I saw things fundamentally, technically, pattern-wise all setting up that I took a new position last week. Nothing major yet, of course, but so I'm attracted there. 2 observations to share with you. The CFTC data coming out every Friday afternoon, which documents positioning of commercials or hedgers and speculators. Something is very highly unusual going on right now, in that corn, beans, and wheat are all just, I mean, let's call a spade a spade. They've been very, very quiet. Yeah, you get 5% moves up and down, but in the scheme of things, these markets are dead.
John,
hanging there low.
We got to pay a few bills. Could you please stay on with us? We have to pay a few bills. I want to talk to you more about this, especially about the open interest part. Could you stay with us, please?
Will do, please.
Okay, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks. We're talking with John from the Tiger Den, Mr. Z from Philadelphia. John, we were talking about the grains and how this open interest is starting to look sort of interesting, but the fact that there seems to be no interest. The last time we saw something like this was one of the most explosive moves we had. If you remember back several years ago, when beans got up into the teens, a lot higher than where they are now, we had the same type of situation. So do you think it could possibly be weather related, the fact that we have this really extreme, cold weather, and now it's followed by almost springtime weather?
Do that, Larry. There's an emerging drought building right now in the southern plains, the heart of the winter wheat area. I'll just to elaborate further on that open interest and CFTC data analysis. The bottom line is speculators as a group are heavily shorts beans, corn, and wheat, all simultaneously. Now, that sort of phenomena I've seen before when major bear markets have been in force. But when you look at the price charts on corn, wheat, and beans the past 1 year, past two, look at the weekly charts, what you see is not a declining market. You've just seen a dead flat market. And for reasons that I don't fully understand, speculators as a group are very bearish on all three of these, and yet price isn't falling. So there is this latent fuel to ignite, buying fuel, I call it. Should, for whatever reason, the bearish speculators change their mind and start covering shorts. And I will just, from a weather perspective, I'll just reiterate, the southern plains is in moderate to severe drought. Now, right now, that doesn't matter much because we're not, it's cold. The plants aren't growing yet, but wheat will be emerging out of dormancy literally in 5 weeks' time. And if this weather pattern persists, we could have a situation very much like we had in the winter of 2005 into the spring of 06, where a winter drought took hold then and continued into the spring of 06 and was the catalyst for a smaller winter wheat crop and higher winter wheat prices. And lastly, I'll just tell you there's adverse weather that's been building in Argentina, which is affecting their corn crop. It hasn't changed price yet, but it could. Hence my interest in those price patterns. So I appreciate you going over those with me.
Yeah, John, I wanted to tell you that some of the folks in the den wanted to thank you for your. I'm going to put this chart up that you gave us on the cocoa 2 weeks ago, back on January the 8th, when it was trading around 1840. You came into the Tiger Den and explained this pattern that we were looking at, the fact that it had made the 78% retracement and pulled back one more time. That made well over $1,500 over the next 7 days, and is still considerably above the price that you bought it. Are you still looking at higher prices in cocoa?
Well, like you, Larry, I do see that that pattern where in fits and starts that cocoa market bottomed at 1804, and it's making higher highs, and each low is a higher low. So that's a definition of an uptrend. So
yep,
I guess we'll just keep playing that.
Yeah, that's another definition of the 135 pattern. So kind of keep an eye on cocoa. It should have really strong support in the March cocoa around the 1890 level. And of course, your risk there would only be a few $100 because cocoa, is a very, very non-volatile compared like we have in bonds and things like that. So, John, I want to thank you for calling in, my friend. We always love to hear from you. Keep up your great work, and go Eagles.
Absolutely. Yeah, we'll look forward to that game 2 weeks hence. Thanks so much, Larry.
You bet. Thank you. That was Mr. Z from the Tiger Den. Folks, we want to take a quick look at one other thing that looks interesting this morning, and that is the crude oil contract. Keep a very close eye here. I'm going to post a chart here for the crude oil on a daily basis because we've made that big 1.618 expansion up here from March. Up at that $65 a barrel level. We're now trading at 63 and change. If we get below 62, this is going to confirm that we probably have a pretty substantial high, but it's really not gone very far over the last 4 or 5 days. So this could easily, get above $65. And if we do that, then you're looking at, much higher prices in crude oil. But the fact that we've had such a very, very low volatile 5-day correction, only going down about $1.70 a barrel, that's actually quite bullish. But it does have a pattern that says it could have a pretty good turn, and we're seeing the same thing in that heating oil market. Remember, we look at that at the same time, and you'll notice that the heating oil market has made a really beautiful 3-drive to a top pattern up here at the 210 level, and we're trading around 206 right now. So that's also a possibility that we could get a pretty good correction. But with the lack of volatility that we've had here in the heating oil over the last couple of weeks, given the fact that Niagara Falls froze only for the second time since 1911, is this very cold weather. But now, it's turned really warm. Philadelphia is going to be 50 degrees today. Folks, it's 29 in Tucson this morning. We have snow on the Santa Catalina Mountains right behind the house here. So we had a little bit of rain that turned into snow. It's up about 8,000 feet, but it's cold here in the Pueblo. The desert's very cold here. So the weather, different parts of the U.S. is something. I wanted to share with you something a little bit. This comes from my good friend and former student, Kerry Szymanski at Harmonic Edge. I want to bring this to show you. This is the volume that we see here in the New York Stock Exchange. You'll notice going back to the high of the volume was right there at the dot-com bubble. If you'll notice that, October of 2007. Now look where we are. I mean, we're not having any volume. And the theory behind this is that there's the people that are used to be stock pickers, they're not much around anymore, that algorithmic trading and automatic trading is taking some of this away. But that doesn't make any sense because these guys with algorithmic trading, they're trading for 10 and 20 cents. They're not trading for $30 and $40 moves. So the fact that there's so small a volume, given the fact that the Dow Jones has gone virtually vertical, is a little bit troubling. But they're buying back stocks with the extra money that they're made. That's certainly another reason to make things go higher. But the volume certainly is not indicative of a major move in these things. So we're making it looks like we're getting ready to make a new high here pretty soon here in the S&P. Whether it will or not, we'll have to we'll have to wait and see, but it's getting pretty close now. The Russell is still down on the day. That happens to be the one that we shorted for the 24/7 service, and the gold is still doing okay, and the volatility index is still doing okay. We'll take a little break here and come back. 877-927-6648.
Achievers rise above the rest, and when they see an opportunity, they take action, massive action. Achievers capitalize on every resource in order to experience success at its absolute max. And on Wednesday, January 31st, from 5 to 6 p.m., I'll share with subscribers of Mastering Probability how to achieve even more success with the extraordinary tools that I use to call the markets. These tools predicted the Ebola 2015 stock market bottom, the December 2017 gold bottom, why subscribers added to their mining positions this month as well. Learn the pattern that projects the Dow's next upside target of 30,740. Folks, great moments were born from great opportunity. So don't miss this opportunity to take advantage of my 30-day money-back guarantee for Mastering Probability. All the details are on the homepage of TFNN.com. Sign up today and reserve your spot for the ultimate subscriber event.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we've got the S&P up a little bit. The Russell is down a little bit. The main thing to keep in mind is we've got all these gaps here. The question is when they're going to be filled, not if. And just wait and see. Hopefully, it'll be very orderly because you don't want a crash type scenario to coming into these markets. That's and whether we get that or not is not important because they just don't seem to be. I hope my voice is sounding okay because I got a little bit of a cold, but we'll see how this works. Okay, the one thing that we want to remember about these gaps is historically they will be filled. Like Steve Rhodes said, though, there's a gap on the monthly chart on the New York Stock Exchange Index back in 2013. I'm going to check that one because I watch these things pretty closely. Evidently, I must have missed it, so watch it. The other one to really pay attention to, folks, is I didn't get a chance to do the notes and bonds today, but we've got a really important chance for a bottom here at least a short-term trading bottom here in the bonds. I want to bring this up to you because we're almost exactly at the 78% level. And if you'll give me a second, we'll be able to see it here right around this 148.10 level, and that's been very close to what our low has been so far. So we should get some type of a bounce here, but that's really all it's going to be. We're seeing the same thing in the Treasury notes, just below the 122 level. So it's just a small bounce. That's what it looks like, here, because this is a very important number. But overall, the notes and bonds look so bearish long term that look for a place to get short. We had several things to tell us that we're going to have a lot of trouble around 154 in the bonds, and they certainly did do that. And then they've rolled down to trade below 149. We're trading 148 and change right now. So this is a very bearish market, and it looks like it wants to go lower. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!